Wholesaling houses in New York show. I am Michael Pinter, where I teach you how to start flipping or wholesaling houses, or if you're already doing how to grow your business. I am in Nashville at Investor Fuel, and I got a bunch of requests. So one of the requests were, what fees do hard money lenders charge when you flip or wholesale houses? So obviously this is going to vary by lender, but let's go through some of them. So understand, closing costs in New York are exorbitant. And closing costs when you don't borrow money are significantly less than when you do borrow money. But if you're getting a hard money loan, as most people did, as how I did how I still do on every single deal that I end up closing on, what are the hard money loans? So the first thing is the upfront fees. So most lenders will only charge you for an appraisal, which has gone up a lot since my days in the mortgage business. So you got to figure around $500 for a single family appraisal. And that you're probably going to have to write a check to the appraiser directly. I got a new phone. Where's the camera? I think that's it. Okay. Some lenders will charge you like $1,000 application fee, which may or may not include the appraisal fee in it. Be careful if any lender asks you for any money other than an appraisal fee written directly to the appraiser, because there are scammers out there who go to people who need money and say, we'll get you money at usually a ridiculously tantalizing terms, a very low rate. They'll give you more than anybody else. They ask you for an upfront fee, and then they just abscond with the fee. That's happened a lot. So if somebody's asking you for several $1,000s before a deal closes, I would avoid that person, number one. But sometimes there are lenders that'll say, give me the $1,000 application fee, and some of it will go to the appraisal and some of it gets credited to you. Just make sure that you know that they're legit and they're not some guy you just found on Facebook or sent you a random email. I get emails like that all the time. I delete them immediately because they're almost always too good to be true. We'll lend 100% and we'll lend at 8% rate, and we'll lend 100% of your costs. Usually it's BS. Okay, always. I never use a lender who someone hasn't vouched for and who can't provide you with a significant amount of references. Okay. So that's upfront. So let's say $500. Now at the closing, there's going to be a lot of closing costs, and some are going to be related to the lender. So the first thing are going to be points. Now, what a point is 1% of the loan amount. So if you're borrowing $400,000, so first let me explain how a lot of these lenders work. Almost every hard money lender is going to lend you between 70 and 90% of the purchase price, and most of them will lend you 100% of the rehab costs. So if I'm buying a house for $300,000 that needs $100,000 worth of work, they're going to be a total loan of $400,000. And if I'm paying 1 point or 2, let's say I'm paying 2 points on that, there's going to be $8,000 in closing costs at the closing that's going to be net funded out of my loan. I guess we have time, so maybe I'll go into net funding. What net funding is, it means, and we did this all the time in the mortgage business, let's say there's a 1 point charge on a $400,000 loan. Instead of us wiring $400,000 to the borrower and him writing us back a check for $1,000, we would just net fund it out and send him $396,000. So the same thing happens with your points. So if I'm buying a house, let's just say for $400,000 and borrowing $300,000, I think I'm going to need to bring $100,000 to the closing. But if there are 2 points, I need to bring $106,000 to the closing because there's 2 points on the $300,000 loan. So that's the biggest expense usually are the points. The rest are underwriting fees. Some people call them junk fees. You need to ask every hard money lender what their fees are at closing. Some will charge a blanket $1,000 fee. Some won't. Some will charge more fees. They might charge you an underwriting fee, a lot of garbage fees. Those should not be more than like a couple of $1,000. But you got to compare. And you could ask, sometimes you could say, can you waive that fee? I'm really short on cash. But you don't want to tell your lender you're short on cash because you're going to need money to make monthly payments. Also, you very often on a hard money loan will pay short-term interest, which means depending on the time of the month you close, they might take interest already for that month. Now, what else? Oh, you're going to have recording fees, right? So if you're taking a mortgage, the title company is going to record that mortgage. In New York, they're going to pay a lot to record that mortgage. Recording fees, depending on the county, can be a lot. They could be $800,000. You record a mortgage. You're also, and the seller is going to pay for recording the deed into your name. You're going to pay for the recording of the deed when you sell, but you're going to have to pay additional title fees because of the loan. Now you're always going to have title fees on every time you buy a property, right? Because you're always going to have title insurance. So just to explain what title insurance is, Title insurance ensures that a Native American is going to show up at your house and go, this was my great-grandfather's house, get out. Also, another mortgage holder is not going to come and say, hey, you really owe us $100,000 from before. Title company's job is to make sure all the liens are paid off, all the taxes are paid off. So when you get the property, it is completely free and clear. That's how it works in New York. Other states, there could be other liens that show up. But in New York, you're getting it free and clear. And the insurance, you're getting insured that if there's a problem, a title company should reimburse you. Now, I've had to make title claims before, and I can tell you it's not a fun thing, and it's not like an instant, it's not like dealing with Nationwide where, you put in a claim and 2 weeks later they're going to send you the money. It takes a long time, but you will get that money, and almost, I would say, every single lender and any attorney is going to tell you to get title insurance on it. So you're going to have title insurance fees, several $1,000s just if you're closing. Now, if you're going to get a loan, there's going to be two title policies. There's going to be a title policy for the loan, and then there's going to be an owner's policy. So if I'm buying a house for $400,000 and I take a loan of $300,000, I'm going to have a title policy for $300,000. I'm going to have an owner's policy for $100,000, which just ensures that if there's some issue, I'm going to get the whole $400,000 back that I paid for it. Okay, what else? Any other fees that come up from a hard money lender? So obviously a hard money lender, almost every one of them is going to want you to make monthly payments. Your payments are going to be interest only, but you're going to need to make payments every single month. And then when you pay off the loan, some lenders require a certain amount of time that they want to get their interest on. And if you pay it off early, they may charge you a minimum or they may charge you a prepayment penalty. I would avoid prepayment penalties because they suck. But minimums, if they're short, they're okay. So I have a lender very often who has a 4-month minimum. So if I pay it off in less than 4 months, I still have to pay him 4 months interest. But it's very rare I'm going to pay something off in less than 4 months. So it's not so bad. It's worth it. And then, like I said, you're going to have costs to satisfy that mortgage, which means cancel the mortgage after you pay off the loan when you sell the property. So there's recording fees to the title company. And also, you're going to have to pay a new deed regardless of whether you have a loan or not. So those are some of the closing costs that come up. I'm trying to think if there's anything I missed. I don't think I missed anything, but I could be wrong. So it definitely adds to your closing costs to get a loan, but it's better than using your own money. So I have friends, and some of them listen to me, some of them don't, who got into the business and they had money, right? They had, $600,000-$700,000 saved up, and they use their own money. I think it's always a mistake. Now you say, why? I'm going to pay all this interest. Because it's foolish to use all your cash. It's better to use somebody else's cash. If you're doing a deal, there should be enough profit to pay off the interest on it, right? How much interest are we really talking about? And I see people making very stupid decisions about which lenders they use because of an interest rate. Well, this guy was 11%, but that guy was 10%. And then I go, but he's giving you 10% less on the purchase price. But I have the money. Always use as much of other people's money as possible for several reasons. First of all, it reduces your risk, right? If something goes bad, something happens terribly, it's their money, and most of the time they're not going to come after you anyway. Second of all, let's say an opportunity comes up that needs to close incredibly quickly, where you don't have time to borrow, you're going to want your own money, right? That's keeping dry powder, keeping money available for you to use in case you need it. Also, if a deal goes bad, you're going to need to come up with cash. And if you came up with the cash, you don't have anything to fix it with. So if I borrow somebody else's money, so for example, I was around in the mortgage business, in 2008, and things went bad, and sometimes lenders would take a short payoff, right? But you need that cash sitting around. Now, if you had paid for it, if you didn't have that cash, it can get more complicated. You don't want to walk away from a property if you could come to some resolution with the lender. It's always better to have money. Also, sometimes the construction is going to come more than you expected, and the lender won't fund more. You're going to need to come up with that. Also, if you have to hold it longer, you have to make interest payments longer. So it's always better to keep your own money. Cash is king. It's better to keep it in the bank. I hope this was helpful. If you're interested in all the ways I can help you, go to howtoflipnewyork.com. If you are interested in finding out more about one-on-one coaching I offer, go to coaching.howtoflipnewyork.com. This came by request. So if you're watching on YouTube, please subscribe. If you're watching on any media channel, please click the thumbs up. The likes have really helped the algorithm. A lot more people are seeing my videos, so thank you very much for liking it, which shows it to more people who like it and gets shown to more people. And please keep the comments coming. I post 5 times a week. I usually don't have any idea what I'm going to say, so I look at my comments to get ideas. This came by request. You can ask any question. It does not have to be about the video you're watching. it can be about anything. And I try to get back within a couple of days. If it's something simple, I'll just reply with an answer. If it's something that I've covered recently, I'll send you links to a video or videos on it. And if it's something new, I will do a brand new video on it. So thank you very, very much for watching. I really, really appreciate it.